Hey there and good afternoon traders. Trader Tim from eminimind.com doing a Monday market analysis video to kick off this week, starting with a tax day here in the US. Um, I could pretty much do a replay of last week's video on Monday, and that would kind of, I think, set the tone for this coming week. And essentially, what we were talking about is, being at a negative 23% target up here on this daily chart of the ES. We have a couple of ways that we can break. We can either get some profit taking and have some perhaps new selling come in that drop us down to the next daily retracement, or we could continue on higher to the negative 61.8. And in this case, that negative 61.8 is just beyond all-time highs in the ES. If I zoom out a little bit, you can see those all-time highs back here in September. And given that the last 2 days, Friday and today, have had these really, uh, I guess not huge, but two back-to-back tails, bullish candles, the hammer formation, these tails pointing down intraday, what that looks like is sort of this V reversal on Friday, and then again today, V uh, closing or opening, moving lower, forming a low in the day, and then closing back higher. And that's kind of the key. Selling off intraday and then closing back higher. And given that we've done that twice now, and that we're sitting on top of this negative 23% target after last week where we really just kind of grinded sideways, we should have a good opportunity to make it up here to this, at least 29, 25s. But at that point, 29.50s is really, really close. So there's not really a lot that feels like it can stop the market at this point. It seems to shrug off, any kind of weak news. Uh, so we'll just see what the week brings. We are kind of in the midst of earnings season. Tomorrow we have housing market index after the bell, and then Thursday jobless claims, retail sales, and Friday housing starts. So there's again some bigger economic numbers that could give some shining light on the fundamentals of the market, but it seems like the market's just kind of shaking all of that off and is just going to be on its way to these all-time highs. If we go over and take a look at the VIX, we can see that we did form a new low, which typically corresponds to a market that's making a new high because it's inverse to the market. So very simply, a move above Friday's high, 29.15, should lead us into some kind of uh, big body trending day that would be taking us higher. That's what I'm looking for this week. If we pull over the market profile, this is what last week looked like. We started this little bit of a pullback in the point of control, these darker levels. And as we pulled back, we then kind of formed a little bit of a cup and then rallied our way later in the week, making a higher point of control. Was it Tuesday, Wednesday, Thursday, and Friday? So Monday, Tuesday, Wednesday, sort of point of controls moving down, or a Friday, Monday, Tuesday rather, and then Wednesday, Thursday, Friday, Friday with the gap up, and this area is all unfilled. So I'm looking for the market to, break 29 15s to the upside. If we do get any more downside movement, you've got a few prints up here, and then you come right back into this support level where we were moving sideways. So I'd be a little bit more surprised if we broke down, but the market can obviously do anything and catch you off guard. So if we were to move down, looking for us to fill the gap from Friday's gap up. We'll just call it a 28.91. That would be my target to the downside. And if we move higher, I'd be looking for like a 29.25 and possibly that same day, but likely shortly thereafter to a 29.50, which would be the, let's see here, what's the exact number? All-time high 29.46 and a quarter on the continuous ES contract here. So we'll keep it at that for today, kind of short and sweet. Um, haven't had a ton of trading opportunities last week in this uh, sort of consolidation. Um, and sometimes the market, when we're in these very, very low volatility periods, even though like the market is moving on a let's just call it a weekly basis. Like if we look a couple of weeks ago, we were down here at 27.96s. Now we're all the way up at 29.10s. That's a solid move. But the reason that we don't have quite as much intraday activity is because we have a lot more gaps. And so the market's sort of gapping, making a big chunk of its move in the gap, and then sort of having these smaller candles. I mean, we're talking 10, 15 points on a lot of these candles. So, there's a handful of good trades in there, but not quite as many as I'd been seeing, I suppose, in like February, March. Um, or first part of March. I would say maybe mid-March till now. That's about a month. We're in mid-April. A little bit fewer opportunities. So we'll see what tomorrow brings. And you can check that out. You kind of follow along with my own trading tomorrow. If you tune in over at eminimind.com/VIP, you can check out, kind of look over my shoulder as I trade. And I hope everyone has a great week of trading. And let's hope that we have some bigger trend days in the mix this week to give us some good trading opportunities. So thanks, everyone. We'll talk to you soon.